So, welcome back. This was not the day that I was expecting. I had a lot of plans for the trading day today, but technically, the new vaccine news kind of ruined everything. So, when major news like that appears, I tend to basically just stay out of the market on the sidelines because it can go violently to the upside. It can also go violently to the downside. And the best thing they can do is just sit by and just look where the market is going and then you recess and then just make a new plan. So but a few things changed. There are a few trades that I basically missed, and some of them that I basically got out before they got really bad. So we'll look at the US dollar index first. First of all, this is still looking fairly bearish at this point. We are most likely going to go a little bit lower before we go higher, but there is a lot of support underneath here. I would be very surprised if we broke 92 and went all the way to 91. If that is the case, then we will see indices, stocks, commodities, precious metals, and so on basically explode. And I just don't see that is going to happen at this point because they didn't explode when we got the news of the vaccine. They did go up, but they did not go up as much as I did expect. So we may see commodities increase a little bit, but I do expect us to turn back towards the 50-moving average, and that will, of course, pressure everything else down. So if you look at oil, we can see that oil rallied significantly all the way to 38. I was expecting this to go and test the 50-moving average. That did not happen. At this moment, technical indicators are very bullish for oil, but we have been here several times before. We can write this up. This is the very highs of oil at 33.5, and these are the very lows. So we are basically at the upper range of oil. There was also very promising data from Asia today that the world economy is basically turning around in the most Asian countries. So of course that also helped copper prices and oil prices and so on. But the rest of the world is not doing very well. So United States is not doing well, Europe is not doing very well, and those are major economic blocks that use a lot of oil. So as long as that is going to be the case, I think that we are going to find a lot of resistance in this area here. If we get a very negative candle in the opening tomorrow, or in the European session, that could be a sign that we are heading towards the 50-moving average. If the 50-moving average breaks, then we'll head towards the 200-moving average and then all the way down to these very lows. So I will be interesting, mostly if we went all the way up to these levels here. That will be basically the best thing that could do, similar to that. And next is basically a very weak candlestick here. So we can look at the hourly chart. They are starting to look very weak in the 1 hour chart. So the same goes also for the 4 hour chart. Is also starting to look very weak. So we're heading back towards the $40 range around this area, which will find quite a lot of support around this area here. So if we look at natural gas, which will be much more interesting to look at because natural gas fell more than 4% today. So we have broken this trend line that we had, this trend line here. That is technically gone. We're trading way underneath that. We have broken the 50-moving average and then are trading underneath the 50-moving average. So watch out below, because if we basically have another candlestick similar to that one, then we are going to test this area here. So we're going back down to the 2.6 and 2.625. This could change if, and it technically depends on demand due to weather conditions in the United States. If we're going to have a warm winter, then this is going to collapse all the way down to the 200-moving average. If we have a very cold winter, then we're going to see this continue to the upside. We have tried this several times before. We have had these rallies and pullbacks, rallies and pullbacks. It is very normal for this market to rally very substantially and then collapse completely. And if we're gonna do that now, probably not. We have to see what basically happens. We have to see whether or not there's a red candlestick underneath here. It's a fairly risky trade, so we'll technically see. And technical indicators for this are looking horrible at the moment, but we have been here, for example, in the CCI before, where we had a lot of gray and a lot of selling. So if the CCI starts to turning around, that's kind of a signal that we are going to go higher. We could basically trade sideways here also for a few days, but at this point, we need a bounce from the 50-moving average in order to buy. So if we look at the copper, because I've added copper again. So this was a hopeful trade. It got very overstretched, and I started selling this. And then the news broke of the new vaccine. The market just went completely bananas. And I was expecting this market to rally significantly, but it didn't. It broke down. So I rather lower my risk and try to trade another day instead of basically getting stuck here and losing quite a lot of money. So that is something I've learned over the time. If you enter a market that is starting to become very, very volatile, it's technically best just to cut your losses or take your gains and just get out of the market and then recess for another day, because it is nearly impossible to trade markets that are so volatile that from time to time. But if you look at the 1 hour chart, 2 hour, and the 4 hour chart, you can see in the 1 hour chart it's starting to drift down towards the 50 moving average, and so is the 4 hour chart. So we could look at the Fibonacci retracement here, and we can see that we'll most likely find support here at 3.17, and then we'll have the 50 moving average here as well. So around this area here, we'll fall towards that area and then find support. But the way that copper has behaved recently is that then it has rallied, made a top, and then gradually grounded way back towards the 50 moving average, and then rallied again. That could be what is going to happen here. And then if that is going to happen, then it'd probably be a good idea to basically enter for a buy around this area when it basically gets back to the 50 moving average, and then put a stop loss right underneath. That is maybe something I will consider. So we have Palladium. We can see that we rallied quite significantly, broke down, but we're still in the green, but we're underneath the 50 moving average. Technical indicators for this are all flat. So that there's nothing much to say about this. Other than that, we are technically just trading flat. We need a green candlestick above the 50 moving average in order to say that we are going to go higher. We have quite a significant trend line here, which will act as major support. And the best thing would be if we got all the way down towards this trend line and then bounce from that. We put a stop loss underneath around this area here, and then we'll target these highs. But until now, we're not there yet, and we'll most likely take a few days in order to determine where this market is going. So if we look at gold, gold is, well, the second is the same thing. Is hugging the 50 moving average. We're not breaking above the 50 moving average. There's just too much resistance, and we need a break towards the 1800 level in order to enter this market for a buy. There is going to be an enormous amount of quantitative easing and physical stimulus and so on. So this market most likely will be very bullish in the long run, and to enter here would be basically the tip of the iceberg. But we're not there yet. We're here at 1888. So we basically need to drop a little bit in order to enter this market. So silver, It's the same thing here. We have pierced the 50 moving average. We are basically stuck right at the 50 moving average. But also this market, we need to pull back towards the $20 range. If you look at the Fibonacci retracement, we can see that we found support here because this is the first Fibonacci retracement. But the 50 is here, just at the 200 moving average. So this will move this way. And we basically need this to drop all the way down here in order to catch that buy. It is, well, how do you say? The buy here, there's just too much resistance above, also with the 50 moving average, and it could fall all the way down here. So you could basically get stuck by buying this. So it is a wait and buy at the pullback for this market. So cocoa, this is a probable sell if we have a negative candlestick here tomorrow underneath the 200 moving average. That will mean that we could be able to target 2.238. That is possible. If that breaks, then we'll go all the way down to 2.2. If we break the 50 moving average, then we're going to target the very highs here at 2.7. So that is going to be a quite interesting whether or not we are managing to do that tomorrow. Technical indicators for this are looking very promising. There's a lot of room to the upside, so we could basically break to the upside tomorrow. So if we look at sugar, well, it rallied the wrong way, or it was supposed to go that way, but it rallied that way. So this is a market that, well, you can't catch all of them, and this went the wrong way. The problem with this is that it most likely will fall just as much as it increased. So to buy into this area is quite crazy. So just stay away from this. It needs to pull back towards the 50 moving average in order to be a plausible buy-in for this market. But a possible trade for tomorrow is this market, is the wheat market. So we have a significant trend line here. We can write it up here, which we are right at the edge of. We bounce from the 50 moving average, very encouraging. And if we get another candlestick here, that is a very good sign that we are going to go higher. So we will target, first of all, these previous highs here, and then to the all-time highs with a stop loss right underneath. Technical indicators for wheat are looking very promising. So it is only the MACD that needs to turn around, but the other indicators are turning around. So this is a market or a trade that I'm thinking about doing tomorrow. So if you look on cotton, this is also a trade that probably should have entered today. This was something I looked at, but it happened so fast that I basically missed this. But we are still in the same area. So these are the highs, these are the lows. In order for this market to go to the very highs, it basically has to break these tops. But this is a market that I missed. I was looking at this, but it happened so fast that I technically lost it. So yes, that got away. If we have another pullback towards the 50 moving average, then yes, that is a possible buy-in for this market. But still, we need to break these highs in order to go to the very highs here. Technical indicators for cotton are quite okay. They are improving, especially the CCI, but there's a lot of room to the upside. So we'll see. If this basically breaks as well, then there is possibility that we'll target these highs and so on. So it could go much higher. Day of attention, these are also the very highs of all the way back here since February. So yes, there are a few trades that I was thinking about doing in the NASDAQ and the indices, because most of the indices are very, very overbought at this point. And I prefer buying indices instead of shorting them. So we'll see. So good luck and thank you very much.